Welcome everyone to our ETF Investing Essentials webinar. I'll just wait a moment for everyone to come on in and join the Zoom, and then we'll get started. Feel free to jump in the chat and let us know where you're joining in from while we just wait for everyone to come into the webinar. Alrighty, we'll get started. Hi everyone, for those of you that haven't joined one of our webinars before, I'm Rachel and I'm the Strategic Partnerships Manager here at Superhero. Also on the call with me today is Hayley. Hayley's from our customer success team here in Sydney, and she'll be helping me just answer some of the questions as we go. We do have a live Q&A at the end too, so make sure throughout the webinar, if you have any comments or general chat, feel free to pop that in the chat box. But if you've got some specific questions, please put those in the Q&A function, which should be a little Q&A button at the bottom of your screen, and we'll have time for a live Q&A at the end of the webinar. I'll just share my screen. Bear with me for a moment. Okay. Oh. Great. So welcome everyone to our webinar today. Before we get started, I've just got to run through our disclaimer. So keep in mind that Superhero does not provide financial advice that considers your personal objectives, financial situation, or particular needs, and all investments carry risk. So please consider this carefully before investing. We will have some charts and graphs shown today. Just keep in mind that past performance is not indicative of future performance, and any charts and graphs are for illustrative purposes only. So today we're talking all about ETFs. We'll go through a bit around what are ETFs, the use of diversification in your portfolio, some of the different types of ETFs and a few examples, and then we'll actually go through how to invest in ETFs with Superhero. And I'll take you on a bit of a live demo at the end as well before we jump into Q&A. So what is an ETF? And a unit in an ETF represents a basket of multiple companies, while a share in a company represents an investment in just one company. So you can see using the graphic there on the right, a company like Coca-Cola will have many shares available that investors can purchase, whereas an ETF is an investment fund that holds multiple different companies. So when you buy into an ETF, you're buying exposure to the performance of those multiple companies that are held in that particular ETF. So the shares or bonds, depending on the type of ETF contained within the ETF, are usually determined by a theme. So for example, the top 200 Australian publicly listed companies or the top 100 US tech publicly listed companies. ETFs help you to diversify your portfolio by not putting all your eggs in one basket, to use a colloquial term there. So instead of your investment performance being determined by the performance of one company, you're able to, I guess, balance that risk out by having exposure to multiple companies. And diversification, it's a term that's used often in investing. And of course, investing in shares or any other asset does carry some risk. So diversification is a strategy used to reduce some of that risk by allocating investments across different types of asset classes, industry sectors, or companies. And ETFs help us do this by giving that diversification within one investment. So instead of having to go out and buy individual investments in 100 different companies, you could buy an ETF or an exchange traded fund is what an ETF stands for, that gives you exposure to the performance of 100 different companies within that one unit of an investment that you can purchase on the stock market. So ETFs are similar to shares in companies in the sense of you can buy and sell them on the share market, but different in the sense that you are exposed to multiple companies in one go. So I'm sure many of you have seen ETFs mentioned more and more in the news over the past few years. ETFs have grown in popularity rapidly, particularly with retail investors. And we know that there's been a lot of us that have started investing for the first time in the last couple of years. And so with that growth in individuals and retail investors getting into the share market for the first time, ETFs have really seen a rise as a way for those individual investors to get exposure to multiple companies. And this graph really just shows you globally how much growth we have seen in the ETF market. So if you compare, and this is amount in trillions invested in exchange traded funds worldwide, you can see there it's more than doubled since, even 2014, 2015. So some really rapid growth there. Now, to go through some types of ETFs, the first type of an ETF is an index tracking ETF. So these are often broad ETFs, and they aim to track the performance of a specific market index. So for example, the ASX 200 index represents the 200 largest public companies by market capitalization listed on the Australian Stock Exchange. So if you buy an ETF that is investing in the ASX 200 index or tracking against that index, you're essentially buying exposure to the performance of those 200 companies. The second type of ETF is a sector-specific ETF. So these ETFs will invest in companies that are involved in doing business in a particular sector. So that might be banks, it might be property, could be robotics, there's cybersecurity ETFs, or clean energy or resources. So again, there's hundreds of ETFs listed in Australia, and I think hundreds or thousands more in the US. So pretty much if there's a sector you're interested in, it's very, very likely that there will be an ETF that allows you to invest in the overall sector or that trend. So a great way, if you're not sure what company you want to buy, but you really, really believe in a certain trend or sector, ETFs can be a good way to invest in that sector. The third type of ETF is a country or region specific ETF. So these invest in companies that are listed in a particular country. So for example, India or a region like Asia Pacific. Country or region ETFs are also a really great way to get exposure to a different market without having to invest directly into that market. So instead of having to set up an account with a company that allows you to invest in the London Stock Exchange, you could buy an ETF that has exposure or holdings that are listed on the London Stock Exchange, and you can buy that ETF on the ASX or on the Australian market. So you're not having to directly invest in international shares, but you can still gain exposure to international companies through ETFs. And just a reminder that ETFs can be one of these, but often they're a mix of these different types. So you might get an ETF that tracks an index in a specific country, or a lot of sectors now will have their own index that generally track that sector. So these aren't exclusive, but just going through some of the different types and terms you might hear when comparing different ETFs. And the fourth kind of type of ETF is a goal-specific ETF or an objective-specific ETF. So these ETFs will aim to invest according to a particular objective. So for example, sustainability. These types of ETFs might screen for things like alcohol and gambling. It's always important to keep in mind actually looking at the objective of every individual ETF. Obviously, there's a lot of different sustainability or ethical ETFs out there today, but it's really, really important that you actually go in and have a look at exactly what either the screens are of that ETF. So what are they trying to avoid? What are they including? Is it just that they're excluding certain industries, or are they actively going after, certain clean energy stocks or things like that? So really, really important that the term ethical or dividend or any of these, really a certain sector, it's important not to necessarily compare ETFs like for like, but to actually go in and have a look at the detail under each ETF. We'll go through some of the important things to look at further on in the webinar. So I just wanted to go through a really great resource that's out there and free. And it's a great way to compare different ETFs. Now, obviously, you can log into your Superhero account at any time and search different ETFs or scroll and browse. But Market Index is a really, really good free resource if you want to get an overview of all of the ETFs out there on the Australian market. So if you just type into Google Market Index ETF directory, it'll come up for you. And you'll see this screen come up here. And essentially, it shows you all of the different types of ETFs on the ASX or the Australian stock market. Now, you can see here, I didn't just explain every type of ETF. So there's a whole lot out there, different commodities and metals and things like that as well. So a great resource to go in and scroll through and have a look at the different types. I've highlighted two there because they're the ones I'll scroll down and show you a little bit. The first one here being a broad tracking or broad exposure ETF list. So this is that index tracking broad ETF type. And you can see here, we've got ETFs that track the ASX 200 or the top Australian companies in Australia. You can see ones there that filter down even further. So looking at the top 20 companies, we've got ones there that filter for ESG. So that's more of that sustainability, ethical angle. Again, make sure you look at what they're actually screening for. And you can see there some ETFs that track kind of the more smaller cap market as opposed to the top or the biggest companies in the market. But most of these, aside from I think there's a technology one there, most of these aren't sector specific. So they're looking at an overall market exposure across multiple sectors as opposed to one specific sector. Conversely to that, we've got an ETF list that is determined per sector. And there's some region-based stuff in here too. So you can see the first one listed there is the BetaShares Asia Technology Tigers. So that is looking at a certain sector and a certain region. So technology companies in Asia. And the second one there is the Climate Change Innovation ETF. So looking at companies globally, so not region specific, globally, that derive at least 50% of revenue from products and services that address climate change through the reduction or avoidance of CO2 emissions. So a very specific objective there for that one. And you can see that there's lots of different ones there. It's a really great resource as well because it allows you to compare different management fees. And we'll go into management fees in a second and look at some of the differences there. But ETFs do carry a management fee that is, charged by the provider of that ETF for managing the ETF. It's not a fee that you'll see at the time of purchasing the ETF, or you won't see it coming out of your account, but it is included, in the overall investment performance. So it's important to know that you will be, affected by that fee if you do purchase into an ETF. Now, some of the top providers of ETFs on the ASX, there are multiple providers, and this isn't the exhaustive list, but some of the names you'll often see, the first two here are Vanguard and BetaShares. Both of these providers list many ETFs on the Australian stock market. And again, why it's really important to compare different ETFs, a lot of ETF providers will list ETFs that track similar indexes or similar sectors. So it's number one, you want to decide what type of ETF you want to invest in, but also to compare ETFs across different providers for the objective, for those different fees, for the performance, and the actual holdings as well. So no two ETFs are exactly the same. So make sure that you do your research across providers as well and determine exactly what ETF is right for you. So you can see here some of the largest ETFs that each of these providers have are their big kind of Australian share market index tracking ETFs. Vanguard has some diversified ETFs as well that might track a particular objective like growth or high growth. And you can see there for beta shares, they've got some global ETFs as well. And here's 3 other ETF providers that you might see come up quite a lot. We've got VanEck, ETF Securities, and iShares as well. And just to jump into a few examples and some information you might see when you look up a certain ETF. Here's one from a few of those different providers. We've got firstly the VanEck Vectors Video Gaming and Esports ETF. This ETF holds global companies involved in video game development and esports. So an example of a holding here would be Activision Blizzard, who make video games, and just some information there around the management fee, the performance on a 1-year base and a 3-year base as well. So again, make sure you're looking at performance, not just in the short term, but over the long term. Certain ETFs have been around for longer than others. So yeah, just important to know exactly what you're looking at there. The second one being the BetaShares Global Sustainability ETF. This ETF holds companies identified as climate leaders, so excludes companies with direct or significant exposure to fossil fuels specifically. So an example of that, they hold Apple as a stock in their portfolio. The Vanguard Australian Shares ETF, one of the biggest ones on the Australian share market, has that broadly diversified exposure to Australian companies and property trusts listed on the ASX. So tracks the ASX 300, so the biggest 300 companies. And then lastly, we've got the ETF Securities Battery Tech and Lithium ETF. So this ETF has companies involved in the supply chain and production of battery technology and lithium mining. And there you can see there's some there with the 3-year performance listed and others with 5-year. That's because some of these ETFs haven't been around for 5 years. However, the index may have been around for longer than that. So have a look at the performance of the index as well as the ETF itself. That index is what that ETF is trying to track. And here is an example of what you might see if you go onto an ETF provider's website. Which is where you'll find all of the information relating to a certain ETF. I've highlighted a couple of things here that are really important to look at. So the objective we've mentioned before, which is exactly what that ETF is trying to do. We've got the management fee on the right. So you can see there 0.49% per annum. And down the bottom, the performance of the ETF on a yearly, 3-yearly, 5-yearly basis, and since the ETF started as well. One thing that's not here, but is also really important to look at, is each ETF will give you a list of the sector breakdown, but also the individual holdings of that ETF. And it's important to look at the percentage weighting of each holding in the ETF. There are some different, I guess, ways that ETFs will allocate holdings. There are some that will have different weightings or percentages of each stock in their portfolio, and there are others that are more equal weighted. So they'll hold an equal percentage of every holding in the ETF. And obviously that has an impact on performance. So just important to have a look at what type of weighting there is to each individual holding in the ETF as well. Now, jumping from, I guess, the specifics of what an ETF is and having a look at ETFs themselves, we thought we'd just have a bit of a chat around building your portfolio over time. And this might be with ETFs, it could also be with individual stocks, but I guess just looking more at your approach or any of our approach to investing over the long term. This graph essentially just shows you an example of what your investments could look like if you invested $100 monthly over 10 years and got an average of a 9.4% per annum return, which has been the average return over the last 30 years, as per the Vanguard index chart for 2021. Now, this graph looks like it's straight up. We know the markets are not like that. So this is purely for illustrative purposes only. The stock market has its ups and downs. There are up years, there are down years, and the graph will never look straight up like this. But it does show you that over the long term, and you can see here, the lighter blue underneath is your contribution or the money you've put in over time. And then the darker blue at the top there shows you your compounded return. So over time, as you consistently invest and build up your portfolio, the amount or the percentage of your portfolio that is made up by a return or money that you didn't initially put in, you can see that grows over time. And that is the effect of compounding. Now, a great resource if you want to do your own kind of analysis on this or have a look at your own investing budget and goals and time horizon is the Money Smart compound interest calculator. So you can go on to Money Smart, you can pop in how much money you've got to invest, whether that's $100 monthly, whether that's $100 weekly, more or less. You can go in and pop all that information in and also put in how long you'd like to invest for. And you can see I guess just some high level information about what that might mean. Again, it doesn't take into account how the market actually performs, but it's based kind of on a historical interest rate or performance rate there. Now, something we all wonder is when is the best time to invest? And unfortunately, none of us know how the market is going to perform in the future. So we like to show this graph just as a way of comparing different times that people might invest or different strategies people might have. And this graph shows someone that invested $12,000 a year for 10 years and what the outcome would have been had they followed different approaches in terms of their investing or holding their money. And this the time period that this was measured on was between 2010 and the end of 2019. So just for reference there. And what we can see on the left is the strategy that person took and then the outcome. So person one, perfect timing. If someone invested that $12,000 into the share market at the lowest point each year, they would end up with that number one number on the right. So $189,885, the highest amount out of all of the five. The second approach would be if that money was invested on the first day or the 1st of January every single year. And you can see there what the outcome would have been. The third strategy is dollar cost averaging. So this is instead of putting all of that 12,000 in at the start of the year, if someone went in and invested $1,000 on the first day of each month throughout the year. And you can see there what the outcome would have been. Number 4, perfectly wrong timing. And this is, I think, something we all are afraid of, is if you invest in the market at the high point of each year, kind of getting the market timing wrong, but you still invested each year, you can see what you'd come out with. And then number 5 is cash, or essentially not investing that money. And to break down, I guess, what this is telling us is if you get perfect timing, which not even the professionals do, great, you will get the most money. But the real message here is that the difference, I guess, in perfect timing and perfectly wrong timing really isn't that much. And essentially anything is better than nothing over the long term. So you can see there that cash is clearly the loser in this picture. Again, it is past looking, but does just show you the power of long-term investing or what it has been historically. Great. So now we're going to get into, before we jump into the Q&A, a bit about investing in ETFs with Superhero. So at a high level, For those of you that have a Superhero account, you may have invested in ETFs with us before, but Superhero doesn't charge any brokerage when you buy ETFs. So you can come onto the platform, make a deposit. The minimum investment is $100, and you can buy into ETFs with no brokerage fees at all. There is $5 when you eventually choose to sell a holding, but you can buy in over time and there won't be any fees. The only fee is to sell for Australian ETFs. For US ETFs, there's no brokerage fees when you buy and sell, but when you move money to and from Australian and US dollars, there is an FX fee that is charged at that point. So just to keep in mind, no fees to trade, but there are fees when you go in and out of Australian and US dollars. Once you have US dollars, if you want to buy US ETFs, you can buy and sell those with no brokerage fees. We don't charge any monthly account fees either. So it is just that brokerage on Australian and then the FX fee for US. And you can do it all within your mobile app. Tax time, which is coming up around now. We also have tax reporting on the desktop and your mobile app as well. And there are specific ETF reports that you can get that will really help you at tax time if you're investing in ETFs. Feel free to go to our support page or contact us on live chat if you've got any more questions around the tax side of things. And I'm going to go through this in a live demo, so I won't spend too much time on this slide. But you can see there, it's a pretty simple process to sign up for an account if you don't have one, to deposit funds in real time if you have Pay ID, and then find a company to invest in and off you go. For those of you that do have a Superhero account, you may have seen our themes section, and we'll have a look at this in a second. This is just something we've created to help you understand ETFs a little bit more. So ETFs can sometimes have names that are a little bit confusing or complex. So we've just named them whatever kind of the high level theme is or sector. And we'll have a look at that now. So I'll just stop sharing my screen for a moment while I get up my demo. Bear with me. Alrighty, so I am in my Superhero account, and when you log into your Superhero account, you always come to your dashboard. So here you can see some information about the markets. You can see your portfolio value. Now, this is my demo account for webinars, so I don't have too much in here. And then you can look at how you've performed over time as well for the Australian investments you might have and for the US investments you might have if you've got those. And you can see here, I have one holding currently, which is the BetaShares Global Sustainability ETF. And you can see my performance there over time as well. Now, before we go and invest in an ETF, I'll just show you an example of the information you can find on your Superhero account about each ETF. So we come in here, we can see it's a Global Sustainability ETF. We can look at the performance of this ETF. We can look at recent prices, the highs and lows. We can see when I bought here as well and how the performance has been since then. And then we can see a description. We can see some more information here, including dividend yield, if relevant. And then something I really like is this top holdings section. So I can come in here and look at the top holdings of this ETF and what percentage of the total ETF holding that particular stock or company makes up. So back to what I was saying before about the different weightings of ETFs, you can come in here and have a look at that on your Superhero account. Now, I've already got some cash in my wallet ready to invest, but if you don't have any cash in your wallet yet, you can come to your wallet. You can go to the deposit tab. And here you can see the different ways you can deposit. So I can copy my unique pay ID and pay into my account from my bank, or I can use my unique BSB and account number for my superhero account and transfer from my bank that way. That can take 1 to 2 days depending on your bank. So if you want real time, it's pay ID, or you can use that direct deposit from your bank if your bank doesn't offer pay ID or if you'd prefer. And neither of these methods carry any deposit fee. If you do want to use BPay, we do have BPay deposits as well, but this does carry a $1 transaction fee. So you just got to keep that in mind, and it can take 1 to 2 days as well. Once you've got your money in your account ready to invest, it'll come up here. You can see here that I've got $105 ready to invest. So I can come to the Invest tab, and I want to buy an Australian ETF today. So I'm going to select the Australian flag. And here's where I can start to see all of the investments available. Now, this Invest tab doesn't have all of the ETFs listed. So if you already know and you've compared ETFs and you know what you want to invest in, you can come in and search here. So for example, battery tech, I can see here the ETF Securities Battery Tech ETF, or I can also see some similar ETFs that are listed in the US. But if you're not sure yet, what you can come and do is you can look at our theme section, which has a list of a range of different ETFs. You can see there with some slightly different names on there just to explain what sector or theme they're investing in. And you can come in. What are we going to pick today? I might pick, I've already got some of global sustainability. So I might pick the global top 100 ETF. I can come down again, have a look at some detail. Can have a look at the holdings here. So again, you can see different companies in different percentages here. And then once I'm ready to invest, I can hit the buy button. I can choose what type of order. Now, a market order will just send your order into the market at the best price available at the time. If you do want to specify a specific price you're willing to buy an investment at, you can choose a limit order. So I might not want to buy this ETF unless it hits $90, for example. I can do that. But for today, I'm happy to go with the current market price. So I'll select a market order and I want to invest $105. I'll then review my investment. It'll tell me I'm buying, that I have $0 brokerage. So that's because I'm buying an ETF. And I can confirm my order. Now, if you've got a trading pin set up with Superhero, you can enter your trading pin here. I don't have one set up on this account yet, so it has sent me a text message, and I'll just pop in my code and submit my order. Now that order has gone into the market. I'll go back to my dashboard. If I scroll down, it's executing. Oh, it was in pending, but it's already executed. And now I am the proud holder of the iShares Global Top 100 ETF. And there we go. So that's how to buy an ETF with Superhero. I'll stop sharing my screen and we will get into some questions. Okay, I'm going to go to the Q&A function firstly. I know there's a couple of questions in the chat. Feel free to pop those in the Q&A as well, and I'll go through those in the Q&A. Okay, so the first question is, can you buy partial units of an ETF, or does it have to be whole units? Really, really good question. Depends if you're buying an ETF on the Australian market or the US market. So if you're buying an ASX ETF or an Australian ETF, you will need to buy whole units of that ETF. And again, there's a range of different ETF prices. Some are priced under $10, some are priced up more around the $100 mark. So yes, you will need to purchase whole units of an ETF. Again, when you order, you can just put in how much money you want to invest, and it will invest kind of to the closest unit for you that you're able to afford for that dollar amount. and the rest will just sit as cash in your wallet. For the US, we do fractional shares for the US. So the minimum investment is $10 US, but if an ETF is $50 a unit, you can actually just invest $10 into that ETF, and that'll be fine for the US. So it's a market-based thing, but in the US, you can do fractional investments or buy partial investments in an ETF or a stock for that matter. Whereas in Australia, you do need to buy whole units, and when you see that kind of price, you need to buy, that's the price for one unit. So you need to buy whole units of investments in Australia. The next question is from Tony. So a couple of questions around Superhero charging zero brokerage on ETFs. Now, this is something that we do just simply to allow people to buy in with no fees. We do have that $5 fee when you choose to eventually sell, and we charge $5 brokerage on individual stocks on our platform. So we do make money in other ways. But great question from Tony. Does that mean that the entry price into the ETF is higher than it would be if brokerage was charged? Absolutely not, Tony. You're still getting the market price. We just don't charge a fee on those buy orders. Another question, how do I find all the ETFs available if they don't contain the word ETF in the title? Yeah, we've got some great features, new features coming to our platform in order to find the investments you're looking for. You can search any ETF. The best way to, I guess, decide what ETF you want to invest in, though, is to use one of those other resources we looked at. So either an ETF provider's website or market index to look at the entire suite of available products on the market. The ASX itself also has a list of all of the ETFs that they have on the exchange. So I'd really recommend going onto one of those resources, having a look at all of the differences, going on to the ETF product site as well, or product page. And once you've made that decision, you can come onto the platform and search your ETF and away you go. Alternatively, you can have a look at those themes on our site on the Invest tab, and you can select an ETF from there. All right. Just finding some other questions. Advice on ETF portfolio construction. Unfortunately, I can't give you advice on how to construct your own ETF. There's plenty of resources out there, though, in terms of portfolio construction. And yeah, it is good to look at what you're actually looking to achieve. If you're just looking to achieve the entire performance of the Australian market, then there's ETFs for that. If you are looking to invest in the performance of a particular trend you think is really viable or will be really important in the future, then you might have a slightly different objective, both in terms of the companies you want to invest in, but also in terms of the returns you're trying to achieve as well. And you can, again, look at all of the historical performance of each ETF. Question on the management fees for ETFs. So just to reiterate, the management fee doesn't get charged on top of buying into that ETF. So you won't see it at the time of purchase. You won't see it as any fee coming out of your Superhero account. But what it is kind of included in the overall performance of that ETF. So there will be a fee portion, I guess, that is charged or taken out of that performance on a per annum basis, and that is charged by the ETF provider. So it's not a Superhero or brokerage fee. It is a fee charged by the ETF manager themselves for managing that product. All right. I saw a question there around minor accounts or investing for your child. Yes, Superhero does offer minor accounts. So when you have your individual account with Superhero, you can then go into your profile and click add an account. And there you're able to add a few different types of accounts. You're able to add a minor account. So if you have a child or a grandchild, you can set up an account and invest for them. Keep in mind that you're still the legal owner of those shares and those investments, but you can set up kind of a separate, if you want to separate out those investments, you can set up a separate account for them as you would a normal individual account, and all of the same fees and everything apply. The other type of investment or investment account that you can have with Superhero is a company account. So that includes trusts and SMSFs with a corporate trustee. You can set up an account and invest on behalf of that company as well. Yep, this recording will be shared. A question there around the recording. This will be shared on our YouTube channel after the webinar. So we'll make sure that's up on YouTube in the next couple of days. Okay, there's a question around Superhero's role in the ETF process. So does Superhero own these investments, or do the ETF providers themselves own the investments? Superhero is purely a brokerage platform. So we are facilitating for you to buy into that investment. We don't own anything to do with the investments themselves. So you buy into an ETF, that ETF is managed by the ETF provider. So let's use Vanguard, for example. And Vanguard is the one that actually manages that ETF and has those holdings. So I guess you are buying into an investment that is managed by the ETF provider. Superhero doesn't have any involvement in the selection of the holdings at all, in the performance of that ETF at all. It is purely a relationship between you and the ETF provider. So yeah, important to know who the ETF provider is and the objective of the fund. As I said, Superhero is purely providing a platform for you to buy and sell and hold those investments. Okay, dividends from ETFs. Yes, so some ETFs do give you a dividend. So again, you can go on to either your Superhero account or onto the ETF provider's website, and you can see there some of the historical dividends that are being paid by ETFs. Again, they're all different, and not all ETFs have dividends, but there are ETFs that track for dividend income specifically, and also a lot of the more general ETFs do provide you with dividend income. So you can go and have a look at those. In terms of reinvesting dividends, at the moment, when you receive a dividend with Superhero, that dividend will appear as cash in your Superhero account, which you can then use to invest back into that ETF if you choose, or to invest into another investment if you choose as well, or withdraw that cash. So we really leave it up to you as to whether you want to reinvest that back into the same investment or use it for other purposes. We know that dividend reinvestment or automatic dividend reinvestment is highly requested, and that is on the list for our team. So yeah, at the moment it appears as cash in your account, and then you can use it for whatever you like. There's no fee for withdrawals either. So you go into your wallet again and you'll see the withdraw tab, and there's no fees to withdraw your money. Question from Carla: how do you know what exact companies are in the ETF? Carla, if you go onto the ETF provider's website, they will have a full list of every single holding in the ETF. With your Superhero account, you can see the top holdings, but if you go onto the ETF provider's website, they'll have the entire list there for you. Question: so even though ETFs are diversified within a sector, is it advisable to buy different ETFs in different sectors for more diversification? Yeah, so again, back to the strategy question, it really depends on what you're trying to achieve. But for example, if you wanted to invest in multiple sectors in multiple countries, there are a couple of ways you could do that. So you could, for example, buy one ETF that invests in the Australian total market and one that invests in the total US market. Or you could choose to invest in multiple ETFs within the Australian market that are different sectors, so banks or property or sustainability, and then you might choose to do the same in the US. So there's no one strategy or portfolio mix. It really depends on your own individual circumstances, and we don't provide any financial advice. So if you do want to, you can speak to a financial advisor about your own personal circumstance, but there are a range of different ways you could structure an ETF portfolio. Again, you can buy obviously multiple ETFs on the platform, and you can consistently buy into those as well over time. And question from Jade, you can buy US shares and ETFs as well on our platform. So yes, you can. When it comes to ETFs, you could buy an ETF on the Australian market that holds companies that are listed in the US, or you can buy ETFs that are listed on the US market themselves. So I know that might be a little bit confusing, but a couple of different ways you can do it. But yeah, we do offer Australian listed ETFs and US listed ETFs as well. All right, I think we've covered most of those. If we don't get to any of your questions today, please feel free to contact our support team. You can either pop onto our website and they're on live chat. You'll see a little bubble in the right-hand bottom of your screen, or you can contact us directly at hello@superhero.com.au. And our team here in Sydney will get back to you as soon as we can. Thank you very, very much, all of you, for joining the webinar. It's been an absolute pleasure. And thank you very much to the Superhero team, Hayley and Andy, that have been on supporting me as well. We've got some pretty exciting webinars coming up in the next couple of weeks. So make sure you keep an eye out for our emails, and our Instagram as well is a great way to get daily market updates, but we also post all of our webinar invitations there as well. Have a lovely rest of your day, and we'll see you in our next webinar.